Okay, so deviation is simply when we have a structure, marked like this. This is our area of consideration. This is our area where we are going to refine and find entries. But now we are going to find we get the situation where the price just deviate this market like this and then move to our direction. It stops us here, but the price moves to our direction. Now, this situation now is what we call deviation. And we have principles to know where the price, when the price can deviate, and we have principles where we can be assured that the price will not deviate. Now, how will you know the price will deviate? The first principle is where, the first principle is if we have camouflage or if we have candlestick and atom or camouflage near to the area of liquidity. For example, the price created a camouflage like this and then created another area of liquidity like this. So this is our POI, point of interest, but we had a camouflage and a candlestick and atom, and it obeys all the principle of candlestick and atom and camouflage. But also this camouflage and candlestick and atom is near to this law of our POI. If you find this scenario, it's better you mark this area as your consideration, because price will deviate to this area, then move to your direction. So the first scenario is when you find camouflage or candlestick and atom which are not tested and they are near to that POI of viewers like this. So this is the first scenario. The second scenario is when price created a shift like this, but also created another shift. But this shift here did not meet the FTA principles, meaning it fails to break here. If you find the FTA here is, for example, you are in the 4 hour, you see the price has break. But if you find the FTA of this structure in the daily has not break this point, that means the price will go below this point to find more liquidities. But if you find now the price has break here, but you have the previous structure here, which has already breaked, that means price will deviate to this structure here and then move to your direction. So if you find the FTA of this structure has not breaked, that means the price will go below this point. And where will it go? If you find the structure and the previous structure has broken, and we have maybe inside formations there which are not yet tested. So there is where the price will go and take the entry. Do you understand this point here? So this is the second scenario where we deal with FTA and fake breakouts.
Okay.
You understand?
Yes, sir. Yeah.
Yeah. And the second scenario is where you have formations left. For example, you can find a structure like this. Maybe price shifted. Oh, let me draw it clearly here. Maybe a price created an inside formation before break, and then price what? Price changed the character here, but price came inside but didn't mitigate with this formation, and then price moved below and break this low here. If you find this scenario, it's better you mark this low, this formation here, because price will force to come inside this point to take entry and then move to your direction.
Yes, sir.
But the scenario is like this. You will know the price will deviate only if the structure left are near to the high created or the low created. If they are near this, the price will deviate. You cannot say deviation will happen if the price created something like this. Price will not deviate because the structure from here to here is too far. But if you find the structure are near to each other, price will deviate. So that is what we call deviation. Those are the simple principles of deviation. So let's go quickly to some few examples. I took some entries of using deviation principle. The first entry I took was, I think it was last week. Where this is AUUSD. In the AUUSD, I mark this as my break of structure. Now, normally, if you mark the break of structure, that means from that break of structure to the invalidation point, this is my area of consideration. This is where I have to find entries, and from the same time frame I have an inside formation, that one. But if you look closely, I told you you can find liquidity engineering using candles, wicks of the candle. We had a liquidity engineering here. It was not yet consumed, and it was near this structure here. So from there, I knew that we are going to deviate to this point here. So if we will find that area, if we find this area, we go, maybe let's go to the 5 minute first. If we go to the 5 minutes, we see we had what? We had an inside formation, this one. This was our formation. So we can take that formation. If we measure pips from this formation to that high, it's just 7 pips. So we can take that entry. So if we go back to the daily, that is our entry and that is our stop loss. So if we play price here, price deviates price deviate to that point and took the entry. See? So that was my first entry. But the second example, let's see, the second example was this one. If you look closely here, you see price break structure here. See? So this is our breakout structure. So we know that inside this area of liquidity is where we're supposed to find what? To find entries. But look, we had a camouflage which meets our demands. This camouflage is in the zone, and it meets our demands, and it is near this structure. So we know from here price will deviate to this point. So if we try now to find where the price will go, from 1 hour we find we had this formation here.
Okay.
We had that formation, and if we go maybe to 5 minutes, we had formation. This is a formation in 5 minutes. If we go maybe to 1 hour, I mean 1 minute. In 1 minute, we had this formation at the top here.
Yes.
So this is our formation. So we have to measure pips. If you measure pips from here to here, it's just 1 pip. So we cannot risk 1 pip. That's not proper way to trade. It's better we put maybe even 5 or 6 to be more safe. Be more safe. We cannot trade with 1 pip. So that is our entry and our stop loss. So if we play price here, price shifted and deviated to that point, as you can see. Price deviated to that point and sold to the take profit here. So that,
Yes, sir.
So that is how deviation works. If we